Um, cool. So today's class is on taxes. Taxes is a really important not only a problem, but a really important topic, because as you guys start to make more and more money in your careers, you have to plan accordingly. And unfortunately, the only thing that's a constant in our lives, as we know, is death and taxes, right? So if you remember our last episode, we talked about mastering money, earn their respect. Today, we're going to continue on that topic. And basically, if you want to rehash last episode, we talk about 4 fundamental principles that will change the trajectory of your life. And if you remember, the first principle was find your unique attributes. What is it that makes you unique that you can monetize in the real estate space and beyond? The second attribute or foundation that you need to hone in on is cash flow, right? Figure out how to track your net worth, which RC will discuss and talk about, and figure out how you can start tracking all of your money as it's coming in and out, basically. The third foundation and pillar is understanding investing. When you understand where to put your money so it can grow safely and mitigate risk, you start to grow your wealth exponentially. And the fourth pillar, which is the most important, is consistency. To get exceptionally good at managing money, growing your net worth, growing your whole presence when it comes to your financial foundation, you have to have consistent methodology every single day to get going. So without further ado, I want to introduce you to a partner of mine. He is a national tax expert. He has helped thousands of real estate agents across the United States plan for taxes, understand taxes, get out of trouble with the IRS. And he's going to relay to us some foundational principles that will help us become more financially successful, but also create the foundation for you and your career so you know how to deal with Uncle Sam. So without further ado, RC Thornton, how are you, my friend?
Good, Mike. How are you doing, man?
Great, great.
Well, hey, thank you so much for inviting me to this. I had a little time to walk around the inside of EXP world, and I just have to say this is fantastic. Like, you guys here at EXP, so blessed and fortunate to have such an awesome platform and be part of such an awesome guys are able to. Yeah, like Mike said, I'm RC Thornton. I'm a tax professional, and kind of what my main focus and my work with a lot of business have pretty, so in other words, they haven't filed their taxes in a long, they haven't paid their
Hey,
IRS.
your mic is going in and out, RC.
Okay. Can you hear me better now, Mike?
Yes.
Okay, let me just try to lean closer to this and hopefully that'll solve the problem. Okay, is that better, Mike?
Yes.
So anyway, like I was saying, my background is helping people that have bad back tax problems. So the IRS is coming after them because they owe a lot of back taxes, and they want to know how to fix that problem. And so it kind of gives me a unique vantage because I really get to see on the inside of a lot of different businesses, including a lot of real estate agents, what they're doing wrong and what they could be doing differently to stay out of trouble and make more money. So, kind of what I wanted to share with you today is a few pointers that I've really noticed that are going to do two things for you. Number one is it's going to lay a foundation for success in your business because, like Mike said, death and taxes are the only two. If you don't get the tax side of things right, it's going to create a huge part about how you handle it. You're going to be able to make a lot more money in your business and be a lot more successful, grow your net worth. And also you'll be able to stay out of trouble with the IRS because there's nothing worse than owing them a bunch of money and not care of that situation.
Hey, your mic's still going in and out.
Uh,
So while RC figures that out, he and I have been friends since 15 years old. He's one of my longest friends, and we grew up the ranks together. And one of the things he'll talk about in his presentation is the importance of real estate investment. As we talked about before, it's not just buying, and helping your clients buy and sell real estate. It's also you yourself buying your own real estate portfolio. RC? Are you on, RC? Well, we'll wait for him to get back on. But basically, what he'll talk about is so imperative to success. I can't tell you, so many real estate agents overlook the IRS. They are behind you at all times, as is the state government. And as I said, as you start making more and more money, this is something that you guys really have to plan for and have the right people in your corner. RC, are you on?
Yeah, I just got another microphone here. That probably sounds better now,
Yes,
right?
it does. Continue.
Sorry about that, guys. So anyway, I was saying, apologies if it's redundant. My background, helping a lot of businesses, a lot of real estate agents, back tax problems with the yeah, trying to get them back on track. So I want to share with you kind of like 3 today you really need to know in order to stay out of trouble with the IRS. I just want to confirm, is the mic working okay now?
It's sporadic at best.
Yeah, I'm not sure. I just switched it out, so I apologize too.
It's all right. Do your thing.
One thing like that real estate agents really need to know is don't get too fancy. Like I talk with a lot of agents out there that are like, oh, RC, can I like write this off, write that off? Can I, do this amazing thing I read about on the internet to save a lot of money in taxes? Totally honest, when I talk with most agents, most of them, they don't even have tracking in their, like most agents, hey, how much money are you making, right? Business. Most of them have no idea. They just haven't actually tracked any. Might have a general idea of like I closed $150,000 in sales, but if I say, okay, but what are your business expenses? Most of them are like, guys, you can't plan to save money on tax. Plan to just do like the bare minimum of compliance if you don't know how much money you're making. So the step number 1 is you guys really have to do the basics. What that really means for most people is number 1, you have to, by way of, basically just tracks all of your income and expenses for you. What I really recommend for people is QuickBooks on $10-20 a month. And what that does is if you hook it up properly, it will hook in your income, track all of your expenses. Guys, like if you're trying to figure out how to save money in taxes, you can go in and see like down to the dollar, and in October I made this. Now you can start the plans. Now, what a lot of real estate agents tell me is they say, dude, RC, like I'm a great salesperson. I'm great at getting people. But what I'm not too great at is the numbers. And I'm just and a lot of agents, and maybe you can relate to this, guys, tough to keep on top. Well, it is tough if you don't do it in an automated way. Hook up something like QuickBooks Online, hook up and just track all of your income. And like Michael talked about, even in the last session that we had, investing. Like, how are you going to know how you can even begin to invest to grow your net worth if you don't even know how much money you're making? So, like, this is by far the biggest thing.
Hey, I would say your mic is still going in and out, so repeat everything twice just to make sure people hear it if you can.
Just a second. I'm trying to see if there's something I can switch on my this. But yeah, I mean, again, like I mentioned, guys, be sure you have actual tracking in for your finances. That will actually all of this book in automatically for you. That way, you know where you stand, and that's kind of the basis of the rest of your tax in the first place. You guys catch that, Mike?
Yeah, it's intermittent at best. Unfortunately, your mic is going in and out. But basically, what RC is saying in a nutshell, if you guys can hear him sporadically, is you have to start tracking your numbers with diligence. And we talked about that in the last episode, where you have to really be stringent about writing down and making sure that you have copious notes and money coming in, money coming out. Right, RC?
Absolutely correct. Yeah.
Yeah, go ahead, continue. I'll try to extrapolate if it gets buried in there because of the
Sorry
mic.
about that. Yeah, and guys, the reason I've been saying that, like, and I've really harped on this, is because I talk with so many agents, they come to me and like all the receipts are in a shoebox, so they don't even have like a spreadsheet. Stay on top of this and get it started is the best for you. And I would honestly say to you, like, if your net income low, like if you're after all of your expenses, your income is like $8,000 or below, like if you're a newer agent just getting started, this should be your only tax strategy. Like, don't get tricky. People that get tricky without knowing their numbers hurt themselves.
So just to extrapolate on what RC is talking about, because he's going in and out, is basically if you're a lower producing agent and you're just starting out in the business, don't try to get tricky with your write-offs and don't try to create a zero income on your tax return. As you start growing your net worth, you're going to need to pay Uncle Sam to borrow money to grow your rental portfolio, as we've talked about before. So keep that in mind. RC?
Yeah, absolutely. I mean, don't get too tricky. Next thing I would say is, let's say you're an agent making like 100 grand a year. What you can start to do is don't be self-employed. Start your own business. By start your own business, I mean start your own actual company, like an LLC or a corporation. I'm sure most of you have heard about this before. Have your commission to your business from your broker. That's one of the biggest things you could totally different. The agents that we help set up on that, they continuously save like $5,000-6,000 a year.
So RC, you're going in and out. So let me extrapolate, I think, what he is saying, and you can agree or disagree. Basically, he's saying as you start to make over $100,000 or more in GCI, you need to set up an LLC and or an S corp based on your income. So EXP, let's say, or if you're a real estate agent outside of EXP, the agent and the brokerage is paying the company and not you as an individual, right, RC?
Correct. Yes.
Continue. Sorry.
Yeah. No, appreciate you clarifying that. Now, the reason it's so important to wait until you get to that like six-figure point in your business, because there's overhead associated with doing this. There's costs with accountants, payroll, all this kind of stuff. So if your income is lower, it's not worth it. And my perspective of helping people with back tax problems, screw up the corporation worse than worse. Don't do the corporate stuff right, the S Corp, the LLC. And that's not where you want to wind up.
Say that again, RC. Are you saying that LLCs and S corps that are set up improperly get audited more often? Is that what you're saying?
Audit is part of it, but more from like a compliance. Like if you don't have your baseline, not tracking your numbers, and then you screw up the corporation, worse problem with the IRS than having nothing.
Got it. Got it.
So
basically what he's saying as he's going in and out is when you start making that $100,000 or more in GCI and you're creating that LLC, so EXP or that brokerage pays the LLC or that S Corp, you want to make sure that you have the proper documentation and you are setting it up correctly with a tax professional to assist you. Correct, RC?
Exactly right. Yeah.
Okay. Keep going. This is fun.
Third thing I would say, guys, is so let's say, you point out one more thing about the corporation. Corporation and LLC lowers your taxes without lowering your income. So if you're trying to buy rental property like Michael talks about, if your income is like low, like, hey guys, I made 30 grand this year. Well, no lender's going to let you borrow anything, right? Then you're just, yeah, okay, you save money in taxes, but you're just stuck forever. Corporation and the LLC will lower your income, your tax without lowering your income on paper. That's pretty cool, in my opinion. And I would say, guys, like the third big thing that I would mention to you, like defer taxes in a smart way. Don't be one of those guys or girls out there that's just like, writing everything in the kitchen sink off and writing off like your kid's tuition or writing off this random stuff that's kind of borderline. Number one, it'll lower your income to borrow. Two, like you'll get audited. And I've represented a lot of people in audits, and it sucks. I hope no one in this room and on this call has ever been audited before. It's worst thing in the world. I just had a client. We had to send a 500-page box of documents, a real estate agent, to the IRS as part of their audit. I mean, it's not worth trying to save a few. So do it in a smart way. Don't be silly. I would say the biggest two things I can really think of for real estate agents is smart way is number one, everything Michael talks about with real estate. Real estate is some of the most tax advantage investing you can do. Make money, you defer your taxes on it, you have someone else build up equity in your assets. Absolutely fantastic. The other thing too, guys, is explore different types of retirement accounts. Don't just have to use an IRA. Use things like a simple IRA or a SEP IRA. Or even some businesses, it's appropriate to set up your own 401k. With this stuff, some of it you can stash, tens of thousands of dollars a year into that retirement account. And agents who are making, $200,000, $300,000, $500,000 a year, that might make a lot of sense to do. So, guys, the big thing I would say with taxes is use taxes to make more money. Don't be penny wise, dollar foolish, and try to save a couple bucks at the expense of your dream. Building the future. So do you guys, Mike, do you have any questions on that or anyone else?
Yeah, let me kind of give a Cliff Notes version of what you said, because I think the impact of what you said could be lost because of the bad connection. But basically, here are my notes, and tell me if I'm on the right page based on what you said, RC. Take copious notes, understand all your monies coming in and out of your business. The second thing that you do once you reach that $100,000 or more GCI standpoint is you no longer want to be a 1099 employee or self-employed. You want to have an LLC, a PLLC, and or an S Corp. Am I on the right track, RC?
Got it, man. You're definitely on the right track.
Okay. The third thing is basically don't get tricky with LLCs and S Corps and all that stuff. You're better not to have anything than to set it up incorrectly without the help of a seasoned tax professional, correct?
Absolutely.
And then basically another thing is defer your taxes in a smart way, but you have to do it in a way where it doesn't lower your income, because you remember you got to show a high income on your tax returns to utilize your borrowing power and to go out and buy more real estate. So that's important. And don't get tricky, because the odds of you getting audited is much higher. Correct, RC?
Exactly. And that's a horrible experience.
And then the other thing is this. I mean, I'll harp on this because I think it's extremely important, and maybe you can touch upon it after I speak for a couple minutes on this.
Yeah.
But, I've looked at a lot of different investment vehicles. And as we talked about, the 4 pillars to master money and earn their respect is, find your unique attributes as a real estate agent, monetize those attributes, focus on cash flow. I told them last time, RC, I don't know if you were able to watch the video, but the important thing is to focus on a cash flow statement, not a budget, because a budget is restrictive and a cash flow statement is more about monies coming in every week, and you can plan accordingly to grow your net worth. The third thing we talked about is understanding investing. And I say this all the time, but real estate agents have a real leg up in the investing world because they have one of the best asset classes to invest in, because of their knowledge and their expertise. I mean, you know, my background, how I became a millionaire was because of investing in real estate. And I harp on this all the time, but I really feel like real estate agents have the ability to do exactly what you and I both did, RC, and do it in a great way. And then the fourth thing is just consistency, making sure that you're making daily deposits every single day to grow that bottom line and grow basically the trajectory of your future. I mean, do you agree with that?
Oh, I agree with it 100%. I mean, that's why I'm so lucky to know Michael, because you've helped teach me all of these things, and I've been able to implement it. It worked, and it's helped increase my worth and my wife's worth. And yeah, you as a are in the right place to be doing.
And one of the things RC touched upon as he's kind of going in and out is real estate is one of the best tax advantage areas to invest in. And so, you know, we have Jeremy, Judd, Gabrielle on the call. The dynamic becomes, as people watch this, especially on YouTube Live, what the biggest takeaway is this, as we talked about. You have to transfer earned income into passive income in the form of real estate and rental income. Because as RC talked about, there's huge tax advantages to that income, especially rental income, right, RC?
Absolutely. I mean, you get to write off interest on your mortgage. You get to depreciate the property over 27 and a half years. And, you know, the cash flow you get, the taxes will be relatively low. And there's a lot less taxes on rental income compared to like self-employed income. The tax rates are lower for rental.
And one of the things too, you know, being an EXP agent, or for some of you that, you know, aren't with EXP and thinking of this opportunity as you're watching it in YouTube Live, the biggest thing I would also stress that our teach touched upon is exploring different ways to really increase your retirement to offset your income in a smart way. One of the questions I posed to them last episode, RC, was a lot of agents are with EXP and they're buying a lot of EXP stock for themselves. But the problem is a lot of these agents are buying them in regular, trade accounts, and they're probably going to get demolished on taxes if they ever go to sell at a big gain, right? And what I'm telling them, and see if you think this is correct, you know, make sure that if you have a long-term holding or you're going in and out of stock like EXP, let's say, make sure it's in your retirement account or simple IRA so you're not getting penalized with those motions. Would you agree with that?
Absolutely. I mean, I think doing both is the right answer. You know, I have, for example, in my company, a simple IRA for a lot of my stock investing, including EXP, there. And then I also have, you know, mutual funds set up on auto withdrawal from my account. That's a non-retirement account. And I do that because, you know, that could help grow my net worth. And then wanting to buy more real estate down the road, I could use those funds to help buy more.
Yeah. Well, is anyone, Gabrielle, are you in the audience? You want to pop your mic on and ask RC or myself a question?
Yeah, so thanks. It's some great content. I actually tried to hop on and on the app because I had to take my son to school, so I missed the first like 10 minutes. So I apologize about that. But one of the things that I did want to mention that you really helped me and gave me some advice, Michael, was the fact that getting a multifamily. So what I was able to do was get some of my stocks and purchase a multifamily. I'm actually looking for one right now. I haven't found one. Made an offer, but it didn't get accepted. So I'm going to do that. And utilize, you know, the cash flow aspect of it as well as far as, and then also I had a question on the tax advantages of a multifamily. Is there different tax advantages that you get being with a multifamily as a traditional single family? Is it
Describe your unit to us, if you can, that you're looking for.
What did you say? Describe the unit?
Yeah, like how many units? Where is it? What's the product you're looking to invest in?
I 3 or a 4-plex. So I need, in order for me to make it work and for the mortgage to pay for itself, basically, I'd have to have a 3-plex.
Yes. Yeah, so you can get a residential loan. Where are you located again? Remind me, what state?
Oh, I'm in Tucson.
Oh, you're in Tucson.
Arizona.
Okay, so you're in
Correct.
Arizona. Yeah. So your goal is to buy a threeplex basically, and then live in one of them, let's say, and rent the other two
Right.
units. Correct?
That's correct. I have to live in it for a year.
Okay, awesome. What do you think about that, RC? What can he do to mitigate tax risk?
Well, I think it's a great idea because you would be able to take the tax deductions on the two, and absolutely, you'd be able to write off a portion of the mortgage interest related to the two that you will be renting.
Mhm.
Very
Uh,
smart. I mean, in general, it's the same concept as a single family home, but except, I think you're on the right track having multifamily.
okay, great, great. And then also I have another question. As far as the benefits of a PLLC, so I do have a PLLC, but I'm still a little unclear on what having the benefits of are. So from what I know, is it essentially saves you 15% of taxes right off the bat, correct?
If you set up the PLLC, if you elect it as an S corporation on the back end, did you do that?
Yes, I'm an S corp. Hmm.
Exactly. That's the big part of it is it saves you that you don't have to pay self-employment. What you do is you put yourself on W-2 payroll and you pay yourself a salary for your services rendered to your corporation.
Okay. Okay.
Yeah, but be sure to have yourself on payroll because if you don't and you don't pay yourself a salary, that's a huge IRS audit area.
Okay.
And you don't want to have that problem with them. I've heard about and seen people that have had IRS salary audits for PLCs, and it's brutal. So work
Okay.
with
I'll
your
check.
account. Yeah, work with your
Yeah.
accountant to make sure you're on payroll and everything's set up properly.
I'll check with my accountant. Definitely some good information. I appreciate that, RC.
Bet.
Well, another thing that you touched upon, Gabrielle and RC, is the idea of putting yourself on a W 2. Like I started doing that, I think, 7 years ago, 8 years ago. When did you start, RC?
2015, I think.
Yeah.
Yeah, so probably about the same as you.
And it's extremely important because you got to always look, and as we talked about in the last episode, you got to look at your tax return as your adult report card. Don't slough it off. Don't spend a lot of time analyzing every line item. And what I do is, and this is maybe a trick that you may utilize, RC. RC got his master's in taxation. He's a licensed with the Internal Revenue Service. But what I do is I talk to my accountant and I go line by line through my tax return as if he were a mortgage lender. And I say, like, okay, is this attractive if I'm looking to borrow $500,000 or $1 million? If so, why? If not, why? And I almost have them talk me through it to where the idea of a tax return is it's a tool for you to utilize to leverage your ability to buy more real estate and cash flow more. It's almost a flywheel effect, right, RC?
100%.
So can you touch on that a little bit and why it's so important to have a W-2 and pay yourself a salary and then maybe a 1099 bonus or something like that?
Yeah, from a pure mortgage perspective, I think that lenders look for a W-2. Self-employed is a hard sell to get a mortgage, but with a W-2, it adds in more of that idea of consistency. Do it right, you have withholding from your W-2, and that pays down the taxes you owe throughout the year. But yeah, I mean, and again, that harkens back to kind of like I mentioned earlier, don't get too tricky. Don't make yourself broke on paper. Michael, the idea of an adult report card is a phenomenal way of putting it. That's exactly what it is.
Well, it's just so important. I mean, and that's the thing as you guys start making, let's say, 6 figures plus as an agent, you have to think of yourself as a little mini business, right? And the money that you have coming in, you need to think of every eye that will see your adult report card, your tax return, and how that's going to maximize your net worth moving forward. And that's why the first thing you do once you start making big bucks is make sure you have an S Corp or an LLC paying you a salary. And, and it doesn't have to be a big one. I mean, like RC, what do you pay yourself every year in a salary? Like 50, 60, 70K?
Right in that range, yeah.
Yeah.
And then I get the profits from my business on top of that as a district.
And that's taxed at a lower rate on the other end, correct?
Exactly. Yes.
So, take it from a tax expert, pay yourself a strong but, palpable and manageable salary of 40, 50, 60K a year. And then at the end of the year, pay yourself a big dividend or distribution, and you get taxed at a lower rate for that, right, RC?
Exactly right.
So, I mean, that right there is probably a $5,000 or $10,000 nugget that a lot of these real estate agents don't understand, because they're all 1099, most of them. And then they go to pay their tax bill, and they're just fleeced by the government.
You're right.
I mean, you see it, right? I mean, tell us a horror story about, a high producing agent doing 500,000 plus in GCI.
Oh yeah. I mean, I have all sorts of clients, who make net. I mean, not even GCI, but net $600,000 a year. And they're just getting rammed over by the IRS because they're self-employed. They're paying everything at the highest possible rates. And even just the S corporation, it's not like it would have made all that magically away. They would have saved, they could save, $10,000 a year just by a few little tricks. It sounds like an internet spam ad, but it's just.
Hey, if you could, RC, tell people about self-employment tax. I would assume most people don't know about it, and I didn't really start know about it until I was looking at my return in full detail.
So most agents, you guys probably worked like a W-2 job in the past. So you probably remember from your W-2, there's a box that says Social Security tax withheld. Self-employment tax is the equivalent of that for self-employed people. Since there's no W-2, you pay self-employment tax. That's basically an additional 15% on top of your income. That's why so many agents get behind the eight ball with taxes. Let's say you made $70,000. Let's say $80,000, just to keep it 80 grand. Yeah, your income tax might only be like, 10,000 or something, but your self-employment tax is another, 15. That's why, even if people aren't making a lot of money, self-employment tax bumps them up.
Well, it's such a good. Yeah, I know you're dead on, man. I mean, it's something we all look over, and it's another 15% rake from the IRS just hosing us, basically.
Exactly right. Yeah.
Now we have
another thing.
Oh, go for it. Go for it.
Oh, I was going to mention one thing. So this is a little bit more of an advanced technique, but it's really important.
You left us at a cliffhanger. We didn't hear the last. You said it was really important, and boom, that's it. Try it again.
That's exactly dramatic. So, guys, your salary for your corporation, don't make the salary too low, because I don't think anyone here we're close to retirement. But when you hit close to retirement, you don't want to have a Social Security wage base. It's like nothing. And I see people that do that, like they don't pay themselves a salary, or they pay themselves no salary, and they're like 62, and they go to the Social Security website. They have like $800 a month in benefits that they're going to get, and that's it, because they didn't pay themselves a salary or a W-2 or self-employment tax. So it's not all evil, but you need to kind of like manage it and save as much as you can while still being reasonable.
So it's almost like a game. I mean, we have exactly. NFL pros in the house. Ahmad and Rashid, pop your mic on if you're listening. But it's almost like a game. I mean, it's almost like you got to master the game and plan accordingly to make sure that you're not A, getting fleeced by the IRS, but B, you're making enough money so you can borrow enough money to create more real estate holdings for you and your family, to create more income, which in turn creates a higher net worth, correct?
Exactly.
Yeah.
So the tax code I read somewhere, and this is the best way of putting it, it's not designed to be fair. It just is what it is. It's play. You have to play and win and save money and grow your net worth.
Yeah. No, it's a really important. Anyone in the room have any questions specifically for RC or myself? I mean, this is really good content. It's unfortunate that the mic is going in and out, but you gave some good nuggets here, RC. Anyone want to ask him a question, or myself? Pop your mic on. Jeremy, Judd, you got any questions? All right. Well, we'll just keep talking then because we got another 20 minutes or so to go. So basically, if you were, let's say, an agent just starting out, right? What would you give them as far as advice when it comes to just tax planning? Get your income up and don't do anything tricky. Is that basically that in a nutshell?
Oh, for sure, for sure. Track your numbers, get your accounting set up, track through QuickBooks Online automatically, grow your income, more money. Make sure you're paying your estimates on time, but grow your income. I mean, if you're making 80 a year, your only focus should be growing your income, not trying to save $500 in taxes by being.
I think so many young agents starting out have that problem, right? Let's say they make 50, 60, 70,000 a year and they're writing off so much money where now they're showing they've only made 20, 30, 35 grand and they want to go buy a piece of real estate and they're just getting hosed basically, you know?
A lot of people, it leads them to make bad decisions because, they don't plan their taxes. They made 50 grand. They think, oh man, I'm screwed. I don't have the money to pay that. Let's just try to come up with some creative write-offs. So like you said, not only are they not growing their income, but then they're making themselves an audit risk by being.
So it's almost once you start making over, let's say, $100,000 a year consistently, taxes and tax planning and retirement planning become a really important part of the puzzle, correct?
That, absolutely.
And then let's say you're a very high producing agent, but it's inconsistent. I mean, I'm sure you see this in some of your clients across the United States, where one year they make 200, the next year they make 400, the next year they make 300, the next year they make 800. How do you kind of pave the path, so to speak, to make sure that the picture that you're painting for the IRS and potential lenders looks the best, if that makes sense?
Yeah. I would say, doing things consistent, like not having no big swings unless they can truly be justified as to what happened. Don't overreact. Don't get too tricky if your income goes up. Get up to like that $800,000, throw $50,000 into it. Absolutely. And sure that your numbers make sense, and when a lender looks at them, that everything adds up. Not just trying to be too fancy.
Yeah, I know it's important. Gabrielle, you have any questions that we can answer for you? Because it looks like you're the most active one in here, my friend.
No, man, I'm just taking notes. It's some great content and definitely some good nuggets. Let's see. You answered the question about the Pllc, the multifamily. No, that's basically. I don't have any questions. I'm sure I will after after the event here. But if I need to, if I do have any questions, I could just. How do I reach you?
Yeah, give them your information, RC.
Yeah, best thing is go find me on Facebook, RC Thornton II. You can just add me. Then you can just reach out to me through a message there. But I think, Mike, the next thing I wanted to talk about was what happens if you kind of fall behind on it. Wanted me to elaborate on that a bit, like how to
go
fix.
for it.
So a lot of real estate agents have back tax problems, and here's where they go wrong. Most of them ignore it for a long time. So they owe like a bunch of money they can't pay. Maybe they don't file their taxes. Then next year it just gets worse. They don't file again. With the IRS, you can get away with not complying for a long time. But, however, the chickens always come home to roost. What you need to do is just proactively deal with it immediately. Like when you file your 2020 taxes, if you can't afford to pay it, file them and call the IRS the next day and say, hey, what can you do for me? And then they'll work out some sort of arrangement. You can make some payment. Done. The worst thing to do is ignore it. That's clients I have in my business are the ones that ignored it. And I have clients that owe the IRS $800,000 in back taxes. You can only imagine what happens when you do that. It becomes horrible. Yeah, you say, wow, exactly right. I mean, I have all sorts of agents that owe multi-six figures. and they're depressed. They careers are very frustrated with their lives, and the IRS is just
Well, they're almost garnishing everything they own, right? Seizing bank accounts, making them sell their houses. I mean, doing everything to get paid, right? And they have the power to do that.
they people don't know this, but they can take your house. And I've had them threaten to do that to my clients before, ones who owed a lot of money. And all these people had to do differently was over the first time they had a problem, first year they owed was say, oh, shoot, I screwed up. Let me correct course now. Let me contact the IRS immediately.
It's a good
That's
point.
all yeah, you have to just nip the rose in the bud no matter what. That's the biggest advice I could give you.
Like you said, don't ignore it. And I've actually had a couple of colleagues that just ignored it and kind of buried their hand in the sand and didn't reach out to them when they could have just set them up on a payment plan, like you said. So
Exactly right. Exactly.
Yeah, you got to get ahead of the problem. And then the other thing too, I would stress, which you're already going down the right path, Gabrielle, is you have to buy real estate frequently and often because it almost becomes a little tax haven for you on the back end where the money that you're making on your little threeplex as you acquire more down the line is going to be a cash cow that's almost I don't want to say, intact, but almost protected by the government and high taxation, right, RC?
Sure, absolutely.
So I mean that's the biggest takeaway is when RC and I were 15, how we met, we were on the football field at our high school and we were talking about nest eggs and growing money at 15 and what 17 years later we are where we are now. But I think one of the biggest takeaways we had struggled in business and I'm sure many of you have struggled. I mean, RC and I when we were in our 20s were like all agents trying to start their careers and it was a toil, it was a struggle. So many doors were closed in our face, right, RC?
Oh yeah.
And so many things just you have to deal with it and we all have to deal with it, but once you get past that and you start learning the tricks of the rich, that's why it's so amazing to have all this class structure and have access to all these people as you start to learn. And when we started learning and growing our net worths, we started realizing we have to shift earned income into passive monthly investments. And for the past, how many years, RC, have we really started doing this? I mean, you've done it actively now for the past 3 or 4.
Right. The past 3 or 4. I mean, you've been doing it since for a decade almost, I
Yeah,
think,
I've been
right?
doing it for 9 years, and it's reflective in our net worths. And the earlier you start, the earlier you get on the bandwagon and stop becoming the victim and start figuring out, okay, how do I do this tactfully to A, pay the IRS what they're due in the least amount of way as possible, and B, buffer myself with all this residual income with these rental properties. It sets yourself free. I mean, how much real estate have you accumulated in the last 2 years, RC, in a dollar standpoint? 2 million?
A little less than that. I would say maybe like 1.6, maybe.
And that's increased your personal net worth, what, another half a million, 600,000?
Yeah, quite a bit in the I guess you could say multi six figures. But yeah, I mean, it changed it. Wise decision to do that. And all with your help too, Michael. I would say.
Well, thank you. But I mean, that's why we're here. I mean, we're here to help people and to showcase you can do this intelligently. It's almost a shame that more people aren't on this call live. I know a lot of people are going to come on YouTube, but I mean, the nuggets that you're giving these real estate agents are worth hundreds of thousands of dollars over the course of their career. Because if you think about it, if you're a young guy like us, let's say you're 30, 32 years old, you probably have another 30 to 40 years left of tax returns and working and creating an income for you and your family. Think if you save 20, like 10 or $20,000 a year, compounded over another 30 or 40 years, that's millions of dollars that so many
Exactly.
people are leaving on the table, right, RC?
Exactly right. And that's exactly the right way to think of it. Is the overtime accumulation.
Yeah, I mean it's just fascinating. I see Ryan came in. Hey Ryan, how are you doing today?
Doing good. How you doing, Michael? I was watching you on YouTube.
Oh, great. You have any questions for RC or myself now that you're in the room?
What is the like? When should you switch from an LLC to an S corp? At what income level? I saw a video on YouTube last week, and the gentleman was saying if you're earning more than $45,000 because of the fees of switching of what's required for an LLC with tax purposes and filing and working with somebody, that it was better after $45,000 of income to switch to an S corp. I don't know anything about this, so that's why I'm learning here. I was wondering maybe if you could just elaborate on that briefly.
Yeah, you bet. You bet. My personal opinion is $100,000 or so net. The reason is because the corporations, there's more fees, there's more difficult to run the corporation. Tax savings are more. And when your income is have a corporation, it's up the account.
Hey, Ryan.
Really.
Oh, so, yeah, you're kind of going in and out, RC, but basically, just in a nutshell, what RC is stressing is usually it's $100,000 or more before you want to set up a S corp, because there are fees attached to setting that up, and if you're not making consistently six figures or more, the benefits don't outweigh the costs. Correct, RC?
Correct. Exactly right.
Thank you for that. And one more quick question, if I may. Is it better to start off as a new agent as in LLC?
I would say from a legal perspective, yes. Always switch your LLC to an S corporation.
Well, from an, and I'll touch on this too. Like as an LLC, it just buffers you from litigation too, Ryan. I mean, so, let's say you're making $50,000 a year. At that point, your number one goal should be to get to six figures. That's what you need to focus on. Not tax structure, not any of those things. But once you get to six figures, that's almost the magical number where this stuff becomes really important. It becomes a game of chess, not checkers. And how are you going to move money around to, number one, stash a bunch of cash into your retirement accounts? And number two, grow your net worth through the acquisition of more income producing real estate, right, RC?
Absolutely.
Does that answer your question, Ryan? Because I know you got cut off a little bit.
Yes, it does. Thank you, Michael. 2 commas is my goal.
Yeah, and once you get there, it becomes even more imperative, because, when you have that much money and that much income, what I've seen, and maybe you can touch upon this too, RC, especially in Arizona, I'm friends with a lot of, I wouldn't say a lot, but a few 7-figure GCI earners in the real estate business. And a lot of them don't own real estate other than their primary residence. And they're just getting hosed when it comes to the IRS in the state of Arizona. And now they're starting to realize, their accountants and everyone handling them are saying you got to buy income producing real estate to offset some of this income. I mean, can you touch on that, RC?
Yeah, it's a good point. I would say most agents I meet don't own either their own home or another rental property. Most don't.
Can you say that again? 100%. I want to emphasize this. Most agents, and you see thousands of tax returns, don't what?
They don't own their own home, at least, or a rental property. But most of them don't have their own home.
Now, that is mind-blowing. I mean, they're trying to hawk houses on the public, and they themselves don't even practice what they preach, right?
That's what I see anyway. Not to point fingers, but yeah.
And that's almost the game, right? I mean, to become even better at sales and to create more income for you and your family, the dynamic becomes do what you tell others to do. I mean, RC and I, the reason we love, teaching our clients and helping you guys on this call and YouTube Live is it almost gives us nuggets talking with you, Ryan, and Gabrielle and RC with one another, how we can help one another and grow, because it's a collective game. Taxes is one of those games where if you have people that know what they're doing, it really helps you in the long run. RC, you want to add anything?
Yeah, no, I agree absolutely with what you just said, 100%.
Lisa, I see you just came in. Do you have any tax questions for RC or myself that we could help you with?
Good morning. No, but thank you so much. I'm so sorry I'm late.
Oh, it's fine. RC, since Lisa just came in, can you give her a quick 2-minute recap of some of the highlights that we talked about?
Sure. Yeah. Hopefully the connection will work here. Number one is make sure you have good bookkeeping and nothing matters if you don't track your numbers religiously. You don't know how much money you're making. You don't know how to deal with your taxes. If your income is below $80,000, that should be your only focus.
Growing your income. Yeah.
Growing your income and tracking the income. Two is, let's say you're making 6 figures, set up an S corporation. Make a company, employ yourself as a W-2. You'll save a lot of taxes. Number three is don't be tricky in how you try to save. Don't write off a bunch of random stuff. Don't try to make your income low when it's not. Smarter about it. That income in order to qualify to borrow to build your real estate.
Now, here's a quick question, RC. Oh, did you want to continue?
No, that's great.
No, I mean, the biggest takeaway, too, if you just tuned in, Lisa, is this. I mean, RC is touching upon the importance of acquiring real estate that's paying you every single month and income producing and sheltering a lot of income. And one of the biggest takeaways that I really thought about was it's almost a game of trying to make more money and offsetting that money with putting a ton of money, if possible, into your retirement accounts, as well as moving that earned income into passive income through more real estate investment. Right, RC?
Absolutely.
And that's just a game you just have to play every single year consistently. And I think the biggest takeaway that I learned, RC, from you is if there's a problem, get ahead of it. Don't avoid it, especially if it's from the IRS or the state tax the tax board, basically.
100%.
Yeah, avoidance creates huge problems. And I'll tell you, and RC, you can attest to this, who is the worst person that you want coming after you in the United States?
Definitely the IRS.
Yeah, I mean, they are ruthless. I mean, they will take everything, garnish your accounts, steal your house. They will do anything they can to get paid. So you want to make sure you're on their good side and have the help of a guy like RC in your corner. So with that, we got about 5 minutes left before we end the call. Is there anything that any of you guys, Ryan, Lisa, Gabrielle, do you guys have any questions or anything you want us to hit on before we end the call?
So I was using, let's see, QuickBooks Small Business. I was using that one, but I didn't really find it useful. Do you recommend that I use that one again? Or what's another way to track my, profit and loss?
You're talking about QuickBooks, like the online self-employed version, right?
Yeah. I was using that one, but I didn't really find it helpful.
What did you think? Find it too complicated to use?
In a way, because I'd have to classify, all my expenses, and which was good, but I didn't really stay consistent using it. But I guess maybe if I had stayed consistently using it, I would have liked it. But I don't know if they changed the functionality because I was like maybe 5 years ago.
Consistency is definitely key. Trying to catch everything up is what really frustrates people.
Yeah, that's what my case was.
I'll touch
QuickBooks self-employed is great. I really like that tool for real estate agents.
Okay, and that's true. What you said is like you have to track your expenses. You have to track how much you're making, and that's one of the things that I need to work on is because I really don't I don't really look at my profit and loss and keep up with that. So thank you for that.
One thing I would add really quickly too, if you do this right and religious, it won't take a lot of time. Like even in my business, I spend like 5 minutes a week. five minutes a week on bookkeeping because I do it consistently.
Mm. Yeah, that's true.
RC, have you ever heard of Realty ZAM as a bookkeeping, online bookkeeping app?
No, I have. Yeah, I had one client that used it and it seemed good.
And
Cool, but I don't have much exposure to it.
Well, that's the one that I use, and I think, Gabriel, I can totally identify with what you're saying because sometimes it seems like it's going to be more than it is to keep up on the bookkeeping. And they have this little like reminder thing that comes out every Friday. I set myself up for every Friday for them to email me, and they say, "Hey, you haven't put an entry in. What was your mileage? What was your this? Did you do that? Did we miss a closing or something like that?" And it's really has kept me on track because I'm one of those kind of people. I have, all the best intentions, and those cracks seem to pop up more often in some of these things than I would like them to. So you might try that one out. It might help you out. It's helped me out immensely.
And to add to that too, I mean, what I use is just Excel. I mean, as I said last time and last episode when we were on, we had some really great energetic questions. The thing is, you just have to make sure that you're tracking money coming in, money coming out. It's almost like a cash flow statement. And if you do that and you have notes of that and you're tracking your net worth, it's really adding, it's going to make your life a lot easier when it becomes April 15th. Because even now, like we're ending out the year, and I'm sure even you, RC, are seeing people start ramping up and start making the last push, for retirement contributions, making sure that they're ahead of the game when it comes to their taxes, etc. Because our end of year is coming up before we know it.
Definitely right. Yeah.
So, I want to rehash the 4 principles that we talked about in episode 3 because this ties well into real estate. Number 1 is your unique attributes. How do you take and monetize your unique attributes to grow your income? Number 2 is cash flow. As RC talked about, until you get to that $100,000 or more income standpoint, you got to focus on monetizing as well as tracking your cash flow on a weekly basis into your business and also your personal accounts. Number 3 is understanding investing. You got to understand how taking an investment risk can also affect your taxes and affect your bottom line when it comes to your net worth in the future. And last but not least, which RC and I harp on all the time, is just be consistent. Carve out 30 minutes a day and make this a priority in your life. And as you start to focus on it, it will grow. I mean, that is kind of the law of energy and putting it in the space. The more you focus on money movement and management, that number seems to grow. Would you agree with that, RC?
Definitely right.
So we're going to end it here in about a minute. Is there something that you want to leave us with, RC, like a golden nugget, maybe a quote that these guys can take with them, and then possibly the best place to contact you and reach out to you if they have any questions?
Sure. Advice. Biggest piece of advice is master. It's the connection is too bad, so I don't think I can really explain in great detail. But master the basics, and everything else will follow. And follow the system that you've laid out.
Master the basics, and everything else will follow. But basically, yeah, I mean, follow the system. RC and I have been friends for 17 years, and a lot of our money came from implementing these systems, plowing our earned income into passive income, and using the tax code to help buffer us and grow our net worths, right, RC?
Right. Yep.
And our real hope is to, have you guys do this as well and join us in the ranks and have several commas in your net worth. That's kind of the hope. What's the best way for people to reach out to you, RC?
Yeah, just add me on Facebook and send me a message there, RC Thornton II.
Awesome. Well, I just want to thank you guys for taking the time. We are going to close this out. And if you have any questions, reach out to RC or myself via Instagram and or Facebook, and we're happy to help you guys. Hope you have a wonderful day, and we'll talk to you soon.
Thank you so much.
Thank
Thank
you.
you. Have a great day, guys.
Take care. I don't even know how we shut this down here.